Hey guys, it's Yongling again. Today we're going to be going through Cake, which is Cheesecake Factory Corporation, which is ticker symbol is Cake by the way. So if you are a fan of cheesecake, you should definitely visit their outlets. I have not visited their outlets before. If I'm not wrong, most of it are in US. If I'm not wrong, yeah. But I've never been to US before. I'm looking to go there soon. But I have friends that have been there, tried their cheesecake there, tried they don't only sell cheesecake by the way, they sell like normal lunch, dinner and normal meals lah basically, okay. But the thing is that they have a lot of positive reviews. People love it there. It's like one of the best place, or the one of the place that you must go to actually consume your food if you're in US. Alright, so without further ado, let's start with the charts first. So we have a 3 years chart with us currently. We see that Cake recently just had earnings, so the next earnings will be on 25th of April, which is 1 month out. So also we have seen that Cake has been on an uptrend, downtrend, uptrend, downtrend, and then it's going up, down, like a roller coaster, right? So with that, we also can see that the highest point was $67.14 and the lowest point was $38.34. Now if you bought here, you'll be happy to sell here, but then not all the time you expect this kind of sudden drop. This is called a drop. Alright, so usually stock price will look to fill the gap. This is a gap, so they look to fill the gap which is here, and then it actually comes back down all the way again. So right now Cake is trading at $46.41. This is considered a rather cheap stock, considering all the big stocks in US are actually like hundreds of dollars, right? So this is one of the cheaper stocks out there that you can potentially look to add to a watch list. Okay, so let's go to fundamental analysis. So Cake owns around 200 restaurants in US, mostly under Cake Factory name, but it also owns like Grand Lux Cafe, Rock Sugar, Pan Asia Kitchen, etc. etc. They also have small presence in Middle East and Mexico through licensing and third party. Okay, so they make a dozen of cheesecakes, which is distributed for sales and licensees restaurants, and majority of the revenue comes from Cheesecake Factory. Means the licensing and all the other international presence does not actually contribute a lot. Looking at the PE ratio is 21.68, the PEG is 2.15, so it means that Cheesecake Factory is kind of overvalued. When compared with the competitors like McDonald's and Starbucks, it is like super low. It's almost nowhere to be seen, alright, when you put them beside these big companies. Now Cheesecake Factory has an intangible asset, so we give it a yes. For network effect, no. Monopoly scale, yes. Cost advantage, yes. Switching cost, yes. Pricing power, yes. For macro and micro analysis, presence of technological risk, no. There's no risk in technology. Inflation risk, there is inflation risk, because if they're able to raise the price, consumers may not want to actually consume their food. I mean, this is because of inflation. I'm not talking about raising their price in terms of menu, which I'll get to that point later. Or why not, let me just show it to you guys right now. So for Cheesecake Factory, you can see down here that this is the 2017 financial report, right? They actually plan to target to increase their meal price by approximately 2 to 3% annually going forward. So this is 2017, right? So right now it's 2019. They should have actually increased their price by around 4% already, 4 to 6% already. So that's quite good. Because if they are raising their price, it means they're getting more revenue. So the value proposition, they also believe that they are offering customers a huge variety of value, and hence their average check, the average check for each customer, means how much they are spending, including beverages and dessert, costs approximately $21.85 as of 2017. So if they were to increase by around 4% right now, let's do a quick calculation. So it's 21.85 times 1.04. So each customer actually spending $22.74 on average. Well, that is considered expensive in Singapore. It's actually considered quite cheap in the US already, because their cost of living is much higher than ours. So having that said, let's move back to this calculator. The political legal risk, no. Specific people risk, no. Alright, so with that we move on to financial. We can see that they have actually very strong financials. Everything is good, man. Every single thing is good, with a couple of red flag indicators that includes decrease in gross profit margin, because well, that's obvious because they're brick and mortar store. There's a decrease in debt to equity, and there's a decrease in return of assets and decrease in return of equity. We should get to it later. Also, it's also a laggard because you see the market cap is lower, significantly lower than most of other companies out there. Okay, so look at the confidence rating. It's got 8.5.10. It's actually a very fundamentally strong company. However, like I said down here, that it is overvalued, and hence that's why you see that the entry price is $25.91. The dividends is very closely linked to its growth entry price is of $24.80, with a asset value of $10.82 if Cake Factory were to close down today. Now, with a price prediction, we have a 7 days movement of $44.32 to $48.50, and a 30 days price movement of $42.08 to $50.74. When we look at the technical analysis, we say it's an overall summary of a sell. Now, why is this so? So when we draw a chart at this when we draw a trend line at this company, a Cake, we can see that it actually this point bounce back up, this point bounce back, suggesting support. Then we come back here, also more of like here. It was kind of a, like almost touch and go support, but actually eventually broke through, and that's why it goes slower. Let me just draw a trend line here first, right? Okay, then it goes lower all the way down, then support and consolidation around this point, broke below support and consolidation around this point again, supported at this point, supported at this point, supported at this point, broke all the way down, and then currently is trying to challenge this point again. Now, Cake also faced another moving average support line over here. This is a resistance support line, so it's a small consolidation here, alright? So Cake is also currently supported by this 50 days moving average, which is a good thing, right? When we take a look at it, it's a good thing because they're trying to, it's trying to break past, it can't break past this 200 days moving average, it can't break past this resistance line, but it's being supported by this 50 days moving average, so suggesting that sellers do not want to, go full force and sell out. There are still buyers in the market. Alright, so when we take a look at this is a significantly high volume bar, suggesting that the smart money may be at play. But then the next day, there's also a rather high selling volume bar. So with regards to that, I have no comments, because maybe they're just trying to manipulate the market, or it's just purely because of this earnings report that actually was reported. So it can be because of these reasons, that's why it moved up and down so much. Now when we go back to the calculator, we see that the financial metrics, we notice that almost every other year the revenue has been going up, which is rather good. The gross profit margin has been going up since, and then after it dropped back for the past few years. So you can see that there's actually an increase in gross profit margin, which is a good thing. The net income has been increasing substantially, going up all the way up, and till this year it actually went all the way down. Why is it so? Well, let me see why. Okay, so from here we can see that Cake reported a comparable sales growth of 1.94% in fourth quarter, which is a +1 on. Sorry, they actually have a +1 on the guidance. Alright, so this 1.9%, this means that there's actually an increase in 1.9% more customers entering Cheesecake Factory's outlet in US, and that's why this is a good thing, because they are brick and mortar store. They're not a company that sells e-commerce and all, right? So it requires on customers coming to the store, and that's why comparable sales growth is very important. Now, the reason why all these things actually drop significantly, the operating income drop and the net income drop and the EPS drop, is really mainly because of these labor expenses. They are up 130 BPS to actually 35.8% for sales in the quarter. And then also the restaurant margin actually went down. Okay, sorry, the restaurant margin was actually performing better. So okay, these two are actually good point. Cost of sales went down, okay, and then the margin actually was actually better than the analysts expected. So these are actually positive point. So labor expenses were one of the main attributes that actually led to this operating income actually going lower. Now, This is actually, kind of tricky in a sense whereby because they're raising their menu, right? That's why it makes I mean, think about it. Amazon has been raising their price for over the past few years because they're also trying to raise the wages for their own staff, and that makes sense because the cost of living in US is increasing. So if food prices are increasing, the wages should increase too. But this is kind of like a short term thing which will offset in maybe a 2 or 3 years time. Alright, so there's nothing too much to worry about. Now we look at debt to equity. Cheesecake Factory has almost no debt, which is quite good. They're actually being taxed at a very, very low rate. This is after Donald Trump actually implemented the tax benefits. So return of equity is also quite good, of positive above 15%. Return of assets also above 7%. So let me just take a look at this one last thing. EPS has been increasing over the years, and then the number of shares has been decreasing. Now this suggests that this is actually organic income, organic profit by the company. It's actually a very, very positive thing that you can see that the company is actually earning money consistently, and is actually being distributed to the shareholders appropriately by taking into account for EPS. Alright, EPS, number of shares decrease and then EPS increase. So this is actually a very, very positive thing. So let's see what else do we have here. When we look at it, look at the earnings. Oh, one thing I highlight about earnings is that Cheesecake Factory doesn't have a very good earnings track record. You can see there's a lot of miss. So that's the reason why I'm not very, very inclined of cake. But then if you want to go for trade cake, we look at cake 32 days out at 45 at $60. You get a $60 premium. So let's take a quick calculation. 60 divided by 45, you get back 1.3% ROI. That's still considered decent. The open interest is also quite high. Maybe you can bargain around 70 lah, right, in between. So open interest is around quite high, so you should have no problem closing the trade if you need to close the trade, right? This is all periodic selling puts. Alright, so with that said, I'd like to just highlight this one last thing that I'm actually organizing this massive meetup for mastermind group, and then within the first day we have already 47 tickets all sold out. It's all free ticket, all sold out. I only have a couple of tickets left. It's not really a lot. So if you actually sign up already and you want to bring a friend along, please feel free and ask them to sign up before all these tickets are sold out. Right, so once again, this is the Cheesecake Factory, which was requested by one of the members. Personally, I would say till it break above this level here, these two level here, then I would say it's a buy. Right now we are very, very close. This is actually based on a technical analysis point of view. If we're talking about a fundamental and intrinsic value point of view, it's all the way below at $25, which you can even see on this chart here. Okay, so key takeaway, break above this point and it's a good buy. Okay, right now it's forming lower lows and lower highs. So once this is the higher low right now. This is the first higher low right now. So if you actually break past above, it will be all very, very positive and very bullish for this stock in a technical and perspective. Alright, so once again, thank you very much for tuning in, and I'll see you in the next recording. Bye bye.